Hey folks, welcome to Sunday Night Stock Charts Live. This is Bob Desmond over at the Contrarian Trader, and thank you for spending only a few minutes of your time this evening on the last few moments of the weekend. All right, we have a bunch to go over. A lot of it's going to be news, a lot of anticipation out there with regard to what's coming this coming week in terms of reaction in the Middle East. We may see some of that. We have a few headlines to go over, but I'm going to kind of let you down off the hook here a little bit. I think it's overhyped, and I have an article that really is somewhat intuitive. So while CNBC wants you to go out there getting all excited, buying whatever on a dip or buying oil futures or buying whatever, relax. For that matter, that goes for gold as well. It goes for the miners. Relax, chill. Let's not get caught up in the headlines. And these headlines are really something to be, fearful of. Now, I fear the headlines more than I fear what's actually transpired. And again, I'm going to leave you off with why I think that this is overhyped for the most part. So let's begin. We're seeing more and more people filter in here. That's great. For those folks out there with the likes, thank you very much. If you could click that like button, it really helps me out quite a bit. And I saw a like on there before we went live, and I'm unable to connect the chat here. If you're typing in comments, I can't see them. I'm going to do a refresh. There we go. Cool. All your comments just popped up. Germano, how you doing, my friend? Richard, how are you, sir? Colton, how are you? RL, I knew you were out there. I knew you were going to be that like before we went live. Good stuff. Eric, hey, brother. Kurt, good to see you. All right, great. I was wondering why no comments. It said there was a little note in there saying comments aren't appearing in chat. All right, that fixed it. Cool stuff. All right, let's get to it. The headlines, I haven't refreshed since we went live. But the headlines are, for the most part, what we've been hearing. And really, is this a shock? Iran no longer abide by uranium enrichment limits under 2015 nuclear deal. So what? Did anybody expect him to do it anyway? It was a bad deal. What else do we have here? Not much. Let's move on. This is Al Jazeera. Much as what you'd expect. Iraqi parliament calls for the expulsion of foreign troops. We'll see if that happens. When we leave, so does the aid. Multiple rockets fired into Baghdad green zone near U.S. Embassy. Operative word, near U.S. Embassy. Not on it, not in it, near. Iranian state TV announces $80 million bounty for President Trump's head. Scorched earth and fire type rhetoric. We're used to this type of talk. We already went over this when Iraq votes to expel U.S. troops. There was an attack down in Africa on a U.S. airbase. Nothing major. There is a fire there. And you don't know whether or not it's attributed directly to the Iranians or if it's some offshoot group. Who knows? So a lot of hey, blockchain. A lot of hot and fiery headlines out there, all meant to get everybody excited. But there's one headline that came out a couple of days ago, and this is the one I hang my hat on. It's this one here. Get ready. Iran deploys F-14 jets. Places ballistic missiles on high alert. F-14 jets. Has anybody seen Top Gun? That was an F-14 Tomcat. That's how old that plane is. So, if anyone's worrying whether or not there's going to be a full-blown out war, unless the Chinese and the Russians come in on the side of the Iranians tomorrow, I'm not going to get all that upset about it. Might there be a tit for tat here or there? Yes. In all probability, that's about as hot and fiery as it's going to get. Might there be an attack on a Saudi facility, oil facility? Sure. It's already happened. It could happen again. But the only thing that the folks over in the Middle East know is one thing, and it's something that the American people forgot a long time ago under Lyndon Baines Johnson, not Kennedy John F., but Kennedy Ted. All throughout that generation, they forgot about the power of the stick. They respect it. They know what it means to get clubbed over the head. They just got smacked really, really hard. So people may want to be saying right now that the president did a horrible thing. He's forcing them into war. Maybe he just prevented a war. I digress. So those are my thoughts on how things are playing out. One man's opinion. Hopefully I'm not proven wrong. Hopefully it dies down from here. I'm going to read a couple of comments now. Kurt, I bought CCJ some while back. If I have some time, I'll take a look at that, Kurt. Kurt, are you a member? I'll be doing the members in a circle at 7 p.m., so we can definitely do it there. I don't know if I'm going to have time. Yeah, Kurt, Old Plains, yep, F-14s. Hey, Patrick. Okay, we're going to check out gold. I think it fades, brother. I'm sorry. I'm the biggest bull out there on gold. I think it fades. And I'll go over why. Oil will definitely go over, RL. No doubt. All right. So everybody's chomping at the bit at the pre-market activity. Let's get to it. Now, on Friday morning, on Swing Trade Today, I mentioned that gold was overbought, the miners were overbought, and that we would get a pullback. I think it fades. I think it fades. I think that this is the worst thing that could have happened to gold. We have RSI, this is on a 5-minute basis, RSI at 95. Unsustainable. Let's pull back. RSI 4-hour basis 89. We're tearing through the third standard deviation Bollinger Band. On what? On what? Yeah, dust. No doubt about it. Dust, for those not familiar, RL just threw it out there, is a leverage ETF putting you short of the gold stocks. You can already see we're pulling back now. Now, yeah, no doubt about it. We'll be selling calls, Patrick. No doubt. So that's going to be on the table, possibly shorting on this extreme overbought rally. But I won't sell my position. That I won't do. I'll hedge it. I won't sell it. Here's a weekly chart. We're tearing through the third standard deviation Bollinger Band. I'm sorry, this is a 4-hour chart. My apologies. I clicked the wrong button. But still, 4-hour chart. We're flirting with the third standard deviation Bollinger Band. Honestly, this is a 5-minute chart. Would you buy this stock or ETF? Commodity? All right. I prefer a much more orderly continuation move higher rather than these rips higher and then only they fade. And that's exactly what you saw on Friday with the gold miners anyway. Not so much with gold. Gold closed very strong on Friday. All right, we'll revisit this. But Patrick, you're spot on. If they decide that they are going to open this market up as they're doing right now, tomorrow morning, we'll be selling covered calls into that strength. and quite possibly getting short using a hedge against our existing position. All right. It be what it be. Okay, let's take a look at oil. I want to go with the light sweet crude price to stay consistent. And I got a couple of emails on Friday looking to go short of gold. This is exactly why I didn't want to short gold. Exactly why. This type of nonsense. All right. So light sweet up over it's up about a 1 1/3. Very overbought, but it can go higher here. This is a 15-minute chart. Four-hour. You already started to see topping action on oil on, what was this? The second, then into the third. My guess is we'll wake up tomorrow morning with more topping action on oil, absent any news. Absent any news. If news comes out that I don't know about right now, well then it's a different story. Do I have any calls now? I'm flat. I sold the, what was it, 37 strike price. Those expired worthless. I sold the puts, the 33 strike puts to bring in premium. Those expired worthless. So it was a good week on the call and put option side. Excuse me. It was a good week on the put and call writing side of the business, and also on the share price. Except for NUGT took it on the chin on Friday. That bearish reversal bar. I saw it coming. So I think that we're going to get a pullback here, folks. I would strongly encourage, not on oil, but on gold. My mind's still stuck there. We're going to get a pullback. Please don't go chasing this. People are going to get hurt. The US dollar is down. I don't think it's staying down. The US dollar last week, on a weekly basis, flashed a bullish reversal bar. Here was Thursday's and Friday's price action. We broke out above support. We closed off the highs of the day. Let's take a look at Bitcoin. Bitcoin rallied back on Friday. It was down, but then it reversed. It had an outside reversal week last week. It's trying to put in a new weekly high right now. You're not seeing any type of fear trade in Bitcoin right now. This is the 6th. Tomorrow. What else do we have? Let's go to Nat Gas. This is an hourly chart. Nice W formation forming here on Nat Gas. Here's your left side of your W, pivot point, right side forming, possible higher low, nice bullish reversal bar. Nat Gas is something to watch out for this coming week. We'll be looking for a successful breakout here. UGAZ comes to mind. Patrick, I know you're out there. All right. So nat gas is looking good. Let's pull back a bit, 4-hour basis. I'm not a day trader, so it's a little bit too close to my comfort. 1-hour charts. All right, so nat gas looking good on the 4-hour basis. We're above the upper band of resistance. The question is, do we close there? In all probability, we will. Let's stick with Kurt. It's Kurt, nat gas. Your question about nat gas. It's looking good right now, early stages. We don't have a confirmation breakout yet, so I'm not getting the warm and fuzzies 100% yet, but I'm certainly warming up to it much more than how I felt 2 weeks ago. So we've come a long way, and I think that the folks that are missing out on, this is the way traders think a lot of times, the folks that missed out on the alpha here on light sweet crude, they're going to be looking to make that up because they missed the trade somewhere else. My guess is orchestrated short squeeze on nat gas, and they will play catch up. Let's take a look at bonds. That's not bonds. That's bonds. All right, so this is no shock here. If you take a look at the TLT, which is the 20-year Treasury bond ETF, we have a bunch of people on here right now. That's really cool. Folks, thanks for joining in. Thanks for spending your Sunday night with me. Can I ask you to please smash that like button? I mean, club it as if you owned gold right now. You were so happy that you own gold. You're smashing that button because you own gold. Please hit that button, please. Thank you very much. All right. So I'll take you to a chart of the TLT really quick. Actually, let's go with the tips and the TLT, because this is, if you weren't bullish on gold before, you have to be now. Let's forget about the price action right now. I kind of regret that that's going on right now. All right, so the tips on a weekly basis last week, on an intra-period basis, hit all-time highs. Think about that. What is a tip? It's an instrument created to protect your portfolio against inflation. Yet the Federal Reserve says there's no inflation. So then why are the tips breaking out to new all-time highs? Why? The market is telling you things. So the tips breaking out, looking handsome. Ravishing button. Love it. Thank you. What else do we have? Let's bring up the TLT. As a matter of fact, I have an annotated version here. Let's bring that up, because I want to illustrate for you the setup that's about to hit. It's like a tsunami of wonderfulness. Where is it? Here we go. Okay, so here is the TLT. Duh. Only when you're live. Only when you're live will it do that. Okay. So take a look at last week's price action. The 2 prior weeks had some consolidation, some volatility. Last week, an outside reversal bar. We are flirting with a major breakout on the 20-year Treasury bond price. Full employment, higher wages, higher prices equals inflation. Yes, but they don't want you to pay attention to food and energy. That's the Federal Reserve. That doesn't matter. That's transitory. That doesn't matter. It's absolutely and utterly bizarre. But here we are, the TLT ready to break out. And what happened? What you would expect happened last week, and that's the inverse of the rally in bonds. It was an utter collapse in yields. This is a 10-year bond yield, an utter collapse. And it's getting worse right now. So longer term, the rally in bond prices, the pullback in yield, that will be the ultimate organic growth vehicle for gold, not Iran. Unless, of course, something bizarre happens. I'm not that smart, but as I know it right now, we have the Iranians deploying F-14 fighters against stealth bombers. I think the drone that took out the general is more advanced. It's a new drone. More advanced than the F-14 fighter jet. They've been flying for 40 years with no parts. We built it. Do you think we're supplying them parts? Maybe we are. Knowing this country, maybe we are. The CIA. All right, so let's go back to the futures. I got to check in on gold again. I thought it would be up. I have to admit, I'm taken by surprise. They're still fighting to hold it. Okay. Hey, Arthur. All right, so finally we have Pat and Arthur on. FYI, for those that don't know about WWIII grants, January 3rd, 1990 was the... All right, so Arthur's giving us a little bit of factoids here, which I love. FYI, for those that know about WD-GAN, 30-year cycles. January 3rd, 1990 was the S&P 500 peak, then a 10-spot 5% drop by the end of the month. Interesting. Germano, Bob, I am watching you on the TV with my 9-year-old. Hi, ladies. Thank you. Your dad's a great guy. She's asking, what are all these lines? You'll learn. You have a smart dad. Yeah, it's good for us, Patrick, no doubt. Germano, would we like to take a tour of the U.S. Sure, let's take a tour of the euro. It's up here. You can see gold starting to pull back a little bit. Okay. Euro. That's 15-minute chart. I'm not a day trader. For those that are not familiar, I'm not a day trader. There are good day traders out there. I would not be a good day trader. I need to overanalyze everything. It has to be at the end of the day. Markets need to be closed. I'm sipping on a cup of coffee and usually bantering with a bunch of folks on our private member in the circle. And the euro is looking good. Not much in terms of change week over week. It's still looking good. What we have here is a seminal shift. Whereas the euro was putting in lower highs and lower lows, that's beginning to change, right? So we're now putting in higher lows and we're beginning to break out to new higher highs. Now, I wouldn't be convinced that we have a full-fledged rally on our hands until such time as we're above the 1.15 level versus the USD. I wouldn't be the least bit surprised to see it happen, Arthur. The stars are in alignment. Wow, this is our biggest group yet. For you folks that are just joining, if I could ask you to hit that like button, thank you very much. And hit the subscribe button. I literally lost 2 subscribers since the beginning of the year. Tick me off. You got guys out there like Ricky Gutierrez, good-looking kid. Good-looking kid. Smart kid. He's got over 600,000 subscribers. Drives me crazy. I lose 2. He gains 1,000 because he's better looking. All right, I digress. So that's the euro. The euro's okay. It's just not. It's not showtime yet. It's close. It's not showtime yet. It hasn't broken out. What I find more interesting is the Japanese yen, because here's an economy that has been left for dead for a while now, and it was back here. I started doing analysis on the Japanese yen, the Japanese stock market, and it was showing signs of life. And what do we have now? We have a breakout, a full-fledged breakout. Higher lows, higher highs. We've pulled back. It looks as though we're going to set up for a new run here relative to the US dollar. Taking a look at the British pound. We need to keep an eye on the pound. Eerily strong, despite the fact that we're probably going to have a Brexit. It's going to happen. Let's extend this out. Here's your lower band of support now on a weekly basis. Here's your upper band of resistance. And the pound is getting ready to rally further. Now the US dollar, I don't like the way the chart was displayed here. Let's go to, here's the US dollar weekly view. We reversed off the lows of the week last week. And on Friday, yeah, this is bad. Friday's price action was really bad. Yeah, we hit that 97 mark and we stopped dead. Dollar's in a lot of trouble. You're going to have the bearish crossover probably this week of the 50-day crossing down below the 200-day moving average. So it's another reason why gold, let's go back to it, see how it's doing. I'm going to keep checking in how gold is doing. That's the wrong chart. Sorry, folks. There's gold. We're still up strong, but we're pulling back. There's going to be a time. There's going to be a time to enter this trade, but it's not right now. You know, we're long of the miners. Fine, we'll get a spike tomorrow. I'll be honest with you. The chart, we're long of the NUGT, and this is disappointing to me because the chart of the NUGT on Friday was not good. In fact, it was horrible. And I actually even sold puts at a 33 strike price. I covered that position at the open because I kind of figured that we were going to pull back further. And I made a profit. I only paid up a couple of pennies to get out. But I was worried about the shares pulling back even further than the 33 mark. We did hit a 33 handle, but we didn't come all the way down. I was hoping that we would get a continuation pullback on this bearish reversal day, and I'm still predicting that we do. Gold is up right now. It hit a high of what, 30 bucks, Patrick? I'm predicting that this week we'll have a new weekly low versus Friday's lows on NUGT. That's my prediction. I'm sticking to it. You can hold me to it. Arthur, prior high in gold was early September, 1566. Where is it right now? I didn't even pay attention to the price. The high of the session. The high was 1590 spot 9. 1566 was the all-time high. I doubt we'll get there. Could we? Sure. But there better be some new news out of the Middle East to justify that type of a rally higher, with these technicals being this extreme. And don't get me wrong, I want gold to go up higher because it means my gold miners go higher. I just want an orderly, nice, orderly upward move, not a blow off and then a huge sell off and people get decimated. Patrick, could have been market manipulation with options expiring. Could have. All right. Let's take a look at the stock market futures. I've held off there. This is the Russell 2000, 4-hour chart. We're down about a half percentage point at support. No new weekly low yet. The NASDAQ, and we're short of the NASDAQ, the Russell 2000 and of the S&P 500. The NASDAQ is down. This is the 100, NASDAQ 100, down over a half percentage point as well. So what we'll be looking for here, we already have our lower high. The question is, do we break to a new lower low? If we do, if we break down below the lows of Friday, that's a confirmation breakdown, at least on a very short-term basis using the 4-hour chart. So we're already short. I wouldn't go chasing this market to the short side. We're talking about one man. I don't care if he was Jesus Christ of Latter-day Saints. I don't care who he is in their eyes. It's one guy, and we're dealing with F-14 Tomcats that are 40 years old. My point is not for the decay, nugget wood. I see what you're saying. Yeah. Yeah, it's nowhere near the yearly high. No, it's a good point, Arthur. All right, what else do we have? The S&P 500. The S&P has gapped down through a support level. So very similar to what you have. Let's clear all this up. Excuse me, folks, while I take a drink here. Okay. What we have here, again, is a lower high and a break below support here in this range would be disastrous for the S&P 500, at least on a short-term basis. Now, we've been calling for a breakdown in this market in Q1 of 2020. But I don't think that it's going to be the end of the market. You have the election coming up. You also have, well before that, you have earnings coming up starting in the next couple of weeks. Earnings season, silly season. What will the markets do? What will the cheerleaders do? They're going to go on to CNBC, pumping up the beat by a penny numbers that were already lowered anyway. So we got to get through silly season. I'm not ready to go jumping in hog wild to the short side yet. I'm satisfied with what we have. I'd rather add more strategically on a rally back and then a failure, raise our stops, just so we get taken out with a small loss or a smaller profit if the trade goes against us. But the S&P 500 on a 4-hour basis right now is looking very, very weak. So beware. I got to go back to gold. Now we're up 21.6. 15-minute chart. Shorts are just getting annihilated today. This is going to get ugly. At a bare minimum, we're coming down here to 1567. What is that? Yeah, 1567. Yes. We've broken out the multi-year highs. We're definitely within the all-time highs, the range of the all-time highs. This is going to pick up steam now to the downside. Let's watch the show for a second. This was a short. If I had the ability, I would have been shorting this run. They better hope news comes out before tomorrow morning. It better be bad news. And hopefully not. God forbid somebody gets killed. But this is not pretty. All right. We'll see how we open up. For any of you that care about the high-risk trades, puts on nugget upon spikes have paid well all along these 3 weeks. My fellow put lover for NUGT. Music to my ears. Hey, Sam. Sam, did you change your name, or are you a different Sam from Italy? I have to ask. Let's check out other commodities. Remember, I just went over a chart of the tips, right? Treasury inflation protected securities. The government denies that there's any inflation. According to the PCE, that's the Federal Reserve's preferred benchmark of interest rates, and that includes food and energy at worst, 1.6%. Here is wheat. Wheat is getting to go on a tear. Were I a commodities buyer, I would be buying up wheat right now. I may just buy. There is a Tetrium fund where I can buy wheat. Folks, members, let's put wheat on our shopping list. I'm going to go to that in a moment. Check out this chart of wheat. Granted, short-term basis. Very short-term. We're beginning to break out here. Commodities beginning to rip up higher. Let's go to a daily chart, or not even a daily chart. Let's go to a that's soybeans. Let's go to wheat. I think that this is going to be the year of commodities. Look at this base on wheat. And you can buy this through your broker. The symbol is wheat. Here was the breakout. We're at some resistance right now, but we're building the right side, and ultimately, once we clear, oh, we did. We've already cleared it. We've already cleared this. So this macro upper band of resistance has been cleared, connecting peak 1 to peak 2 to peak 3 to peak 4. We are now breaking out of a major base here on wheat. There's no inflation. Don't worry about that. Did I just lose everything? There you go, you're back. Okay. Members, we'll be talking about this one. I love these macro plays. Okay. What else we got? Sam must have stepped away. I'm currently looking long. Nugget. Well, Arthur, I'm currently looking to add more as well to Nugget, right? But you know, history has taught me a few things about. I've been trading it for years now, and one thing that we can't do is get lured into the hype, because things get real fast, as I'm sure you know. And I want to be as disciplined as possible. Our number one objective is capital preservation. So we want to be very disciplined. Now we have gold ripping. You would imagine that tomorrow morning, Nugget is going to gap up higher above all of this resistance here. Maybe, maybe not. I think that the probability is that gold fades, NUGT continues his downward move to retrace down to 32 to 32.50. Those are the price points I'm looking at to look to add more. Now, given this ramp up, this massive move up higher in gold, if we get a sell-off, we may just set up here for another run. They just reversed it. But this is a 5-minute chart. I'm not a day trader, but it looks as though they're going to try to give it another spike up higher. But I always like to say, the test is always at the top. Do we break out to new session highs, or do we fail and roll over and break back down into this range here? If we do that, then I think that NUGT heads lower. So we'll see. The morning will bring a lot more answers. What other questions do we have here? All right, so Arthur, we spoke about you want to get long in Nuggets. So do I. I want to add more. Not quite yet, though. Blockchain. Thank you, Arthur. Mike, okay, good. You're answering questions. Good. Arthur, question, Bob. Which is the better short setup in your opinion? Apple, Tesla, or Google? Apple. We'll do a quick run through the charts. And it's Apple is purely on, not purely, mostly on technicals. And I spoke about this on Thursday night Stock Charts Live. I spoke about how overbought Apple was. And at that point in time, we were trading well above 85 on Apple. And if you take a look at Apple on a weekly basis, we closed out the week on Friday at 87.04, including Friday's sell-off. So Apple is very overbought. Might they push it higher this week? Sure. Whereas with Google, while you have what I like to call indecision bars, filled candlesticks, last week it closed out the week up. A little bit of topping action, closed off the highs of the week, no great shocks, so did everything else that was in the stock market space. But it's not extended. There's more upside room to go here. Volume is dropping off dramatically. I want to go back to Apple really quick. Apple volume is still okay. It's still below average. Not great. It's losing momentum, no doubt. Where Google on the short front is a little lackluster. But I would still prefer to stalk Google than I would Apple. Now, as far as Tesla goes, Tesla just had a major breakout, which we spoke about, through this 379.50 level, and it just kept going. As a matter of fact, I have the annotated chart up here. from when we spoke about it. Wrong chart list. It may be on TrendSpider, if memory serves. I think I have it here as well. We'll take a look at it on TrendSpider too. Yeah, here it is. All right, so here's where we were watching the breakout. We had a higher low on Stokes. And here was the breakout. Here was the Pimp Mac Daddy. The close up above $13.65 per share. It was off to the races. Are we due for a pullback? Probably, but I think we're probably going to head higher first. Look at this volume. Institutional demand pushing the stock higher. What's not to like right now? Out of all three of them, anyway, I would stick with the short of Apple, which I am eyeballing. Now, the daily chart of Tesla is not looking wonderful. We gapped up higher on Friday. We sold off the highs of the day, but let's face it, it closed up with a market that closed down. That's relative strength. Whereas Apple closed down, as did Google. But oddly enough, Google was able to put in a new intraday high before it faded. So that's my answer. Hope that answers it, Arthur. Blockchain, wheat not too extended. No, you still need to wait for your entry points. I mean, we can't go running in tomorrow morning saying, okay, we observed the wheat breaking out, and now we need to go buy it. Where's that chart? I thought it was a Tetrium fund. I know there is one. Here it is. Here's the Tetrium fund. The other chart I showed you was the continuous contract. And this is what I meant, that you could buy it on the open exchange. So, let's go with the monthly view. My mouse is driving me crazy tonight. Here's your breakout. It's driving me absolutely. Only when I'm live. Only when I'm live. Maybe the battery's dying. I'm going to switch batteries, folks. Only when I'm live will this happen. My apologies out there. I'm changing batteries as we speak. Okay, so here I'm back. That was the fastest change of a battery I've ever done. So we have broken out here. You know, just because we had this breakout, does that mean we go buying willy-nilly? No. The reason is that we know, I'm still getting this craziness on my mouse here. I'm probably going to have to reboot at some point in time. We know that we're at resistance, or we're very close to it. So no, we don't want to go opening a position before we do a real deep dive on the daily charts, intraday charts. On a daily basis, you know, yeah, we're extended here a little bit. So I wouldn't go chasing it. We may pop up higher tomorrow morning, but I don't view how we closed out on Friday as being the best risk-reward entry point for wheat. The time will come, but not right now. You want to buy a wheat call? So Bull God, whenever somebody asks me about options, I am generally an option seller, meaning I like to bring in premium. I'm the banker, okay? I appreciate the fact that 80% of all options expire worthless. Trust me, I look to exploit every percentage of that at any given opportunity. So, knowing those statistics, when somebody asks me about is it wise to buy an option, my knee-jerk reaction is obviously to say no. I try to avoid doing that. And I try to ask a different question, and it's a qualifier question, and basically it requires the individual to think about the trade in a different light. And that light is this. And I'll ask the question first. What is your edge over other traders? 3 months from now, do you have an edge? And if you can't answer that question with a simple yes or no, and then be able to articulate in one sentence why it should be able to go up higher, my answer to your question is no. I wouldn't buy the call option. I would, if you saw a dramatic pullback and a nice intraday setup, meaning a double bottom setup and a breakout, and you're going to keep it for a couple of days to scalp and profit off of it, fine. But going out 3 months, I don't see a setup here that has me so wholeheartedly bullish on wheat that I know I'm going to make money. I just don't want to see you throwing money away. Me, I don't know if they sell covered calls or sell options on wheat. We could check it out. But if you wanted to average down your basis cost, you wanted to get long of wheat, this would be a great issue to buy and just sell a covered call, generate the premium. Just make sure it's out of the money premium. If your objective is capital appreciation of the share price. That's being a little bit more smarter and more strategic with the trade rather than just simply going out and buying a call. That's the way I would play it. The way I generally like to sell a buy a call is when I see a stock that's extreme oversold levels and I know it's at historical support levels. That's when I'd step in and buy that call. Let's see what else we got up here. Bull God, I hope I answered your question. If not, please ask me another one and I'll be more than happy to elaborate on it. Members, we're going to segue into the members inner circle group in a moment. You should have already received. I was good tonight. I set up an autoresponder. It should be in your email, the link to how to enter the private members group session. You would sell premium. Cool. You're welcome. Eric, I asked a lot of questions about historical P. Yeah, well, I showed a whole bunch of charts. You're welcome, Arthur. I showed a whole bunch of charts about the valuations in this market. They are circa 2000 on so many metrics across the board. Very, very expensive market. Very, very dangerous time here. Okay. With that, folks, I'm going to ask you if you could please hit that like button. I'd really appreciate it. Hit the subscribe button. Help me catch up to this Ricky Gutierrez kid. Smart kid, good-looking kid, with 600,000 subscribers. He's killing me. So please. And click that bell. Hey, John. Speaking of bringing in premiums, for those who are watching but are not members, definitely become a member. Last week's covered call trade alert on NUGT paid for my subscription for the year. Hey, thank you very much for that, John. Thank you very much. And we'll be doing more this week. Arthur, to prove my point, bring up the 5-year chart of Nugget compared to 5-year chart of GLD. Okay. Oh, this mouse is killing me. And to your point, NUGT is technically a trading vehicle. What do you want to compare it to, GLD? Or the GDX? You want GLD or GDX? Arthur? We'll go into GLD. Behind price. We'll make it gold appropriately. I don't know how much we're going to get off of this, but I'll put it up here anyway. The correlation. We're not going to get much. GDX. Okay, that's what I thought. Okay, let me change it. How do they go on the winnings percentage are? Very strange. Let's bring this back up here again. Okay. All right, so it's reflected here in black. So yeah, you can see that there's definitely an outperformance of the GDX over a longer period of time. But as a trading vehicle, I think that NUGT is it's my favorite of the two. But your point is made, Arthur. It's a very valid point. Yes. And with that, let's leave off really quick with gold. And you can see that it did break out. This is a 5-minute chart. It did manage to break out above that upper band of resistance. But I bet you we're going to break back down by tomorrow morning. We'll see what happens. All right, with that, folks, thanks for joining in. I really appreciate it. A great group tonight. I mean, I really had a great time. Thank you for allowing me to spend my time with you on a Sunday night and for you being here with me. And I hope you got some value out of it. Please click the subscribe button, the bell button, so you get notified when I go live in the future. And everybody have a very, very profitable week and enjoy the remainder of your Sunday. Have a great night. Members, I'll talk to you in the members' private inner circle in 2 minutes. Be well. Do, 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 do.